Hello guys, good day. I hope that you are all doing good and welcome to another video lecture in ACC 221 Intermediate Accounting 3. In this video lecture guys, we will be discussing another share-based compensation plan, focusing this time on share appreciation rights. Now, in this video lecture guys, this will be a two-part video lecture that discusses in the first part the usage of market value and intrinsic value in accounting for your share appreciation rights, while the second part will be that of discussing when there is an alternative to receive cash or to receive equity as share-based compensation. All right. So this time, let us start our discussion by explaining the concept of cash settled transaction. In the previous lecture, guys, we have discussed actually share-based compensation through equity settled. That means the employees are given the share options where they could exercise to acquire or to purchase shares of the corporation. But this time, this will be cash settled share-based compensation. So cash settled transaction is share-based payment transaction whereby an entity incurs a liability for services rendered, and that liability is based on the entity's equity instruments. PFRS 2, the same standard that governs your share options or equity settled, provides that for cash settled share based compensation, the entity shall measure the services acquired and the liability incurred at the fair value of the liability. So again, it gives us an idea on how are we going to recognize compensation expense under cash settled transaction. According to the standard, just like um just like your share based compensation through share options, your compensation expense will be computed based also on fair value, but this time the fair value of the liability. Okay? Until the liability is settled, the entity shall remeasure the fair value of the liability at each reporting date and at the date of settlement with any changes in fair value recognized in profit or loss for the period. So the best example of cash settled share based compensation is the grant of share appreciation to employees. All right. So that only means, guys, that when there is share-based compensation through granting of share appreciation rights to the employees, there is a liability that is to be recorded by the um, corporation as a form of share-based compensation. Okay? So this time, let us further discuss what is a share appreciation right. Now, a share appreciation right entitles an employee to receive cash, okay, which is equal to the excess of the market value of an entity's share over a predetermined price for a stated number of shares. Now, if you could still remember, guys, way back in our first video lecture talking about share options, when there is a share option issued to the employees actually will be given this share option a privilege to buy shares of the corporation. But this time, under share appreciation rights, what will be given to the employees will not be share options, will not be privilege, but rather they will be receiving cash. All right? The employees will be receiving cash. Okay? Like share option, a share option right is viewed as compensation for services rendered. But unlike in a share option, the entity shall recognize a liability because a share option right is actually an obligation on the part of the entity to pay cash in the future on exercise date. Simply stated, share appreciation right creates a liability. So again, when we account share appreciation right, the partner of your salaries expense or compensation expense will be a payable or a liability account. Unlike with that of share options, sa share options kasi, when we recognize salaries expense or compensation expense as a share-based compensation, your partner, if we could still remember, is share options outstanding. But this time, the partner of your compensation expense or salaries expense will be an accrued liability. Because, again, when there is a salaries expense, that means that that means there is a payment that is expected to be made by the corporation to its employees. Okay? So this time, this cash guys, this cash to be paid by the employer or by the corporation will only be made on the exercise date. Okay? It is not on the grant date. Alright. Now, we have here accounting issues, not just like with just like how did we studied your share options. We also have here issues on the measurement of the compensation. So this time, the compensation is based on the fair value of the liability at the reporting date. Okay, reporting date meaning is the date on statement date, no? It's the usually at the end of an accounting period, all right? And shall be remeasured at every year end until it is finally settled. So that means we could expect that there are possible changes, whether increase or decrease, with the total compensation expense to be recognized by the corporation. Accordingly, during the vesting period from the date of grant to exercise date, if there are increases or decrease in market value of the shares, the liability also for the compensation will be adjusted. No, as mentioned earlier, it will be adjusted in your profit or loss or in your income statement. Now, the fair value of liability is equal to excess of the market value of share over a predetermined price for a given number of shares over a definite vesting period. That means, guys, ang fair value daw that will be used as our basis to compute our compensation expense. Please take note of this. Take note of this. This is the difference between the predetermined price. Okay? This predetermined price is given in the problem versus the market value of the shares for a particular reporting date. Okay? So therefore, to compute for the fair value, you need to compare this predetermined price and market value of share of a particular date should be present in order for you to get that fair value of your liability. Alright? Basically, the compensation in a share appreciation right is cash paid by the entity. And this is only become known only on exercise date and not on the grant date. Now, basically, guys, that the text is very correct that the entire amount of the cash to be paid by the employer or by the corporation to the employee can only be known on the exercise date, never on the date of grant. Because, as we all know, that there are chances, no, as we wait for the vesting period to come or for the vesting period to be um, fully met, there could be a possibility that the fair value of the liability will change. So therefore, as long as the exercise date has not yet or has not come yet, so we cannot really ascertain as to how much really ang cash liability or ang cash to be paid by the corporation to the employer or to the employee. Okay? So this time, let's proceed also with the recognition, no? Recognition of compensation. Earlier, tapos na tayo to address the measurement of the compensation. How much will be recorded? So to answer that concern, we will be computing compensation expense equal to the fair value of the liability. And then take note, guys, that fair value of liability will change every year, or there's a tendency that there will be changes of that fair value at year end. So therefore, you will also adjust that accordingly in your profit or loss or income statement. Now, let's proceed with the second accounting issue as to the recognition of compensation. No, the timing or the when as the when, no, when are we going to recognize compensation expense. So again, it still vary if it vests immediately or if the share appreciation right does not vest immediately. So if the share appreciation right vests immediately, then the compensation is recognized immediately on the grant date. All right? The compensation expense is to be recognized directly on the grant date. So just like your share options na exercisable immediately, no? Your compensation expense on its entirety will be recognized on the grant date directly. Pero if the share options does not vest until the employee completes a definite vesting period, the compensation is recognized over the service of or vesting period. So just like again in share options, it will be recognized on a staggered basis or on an installment basis throughout the vesting period, whether it's 2 years, 3 years, or so on. All right. So this time, let's have an illustration. So an entity granted a share appreciation right to the general manager on January 1, 2019. Now, after a 4-year service period, the employee is entitled to receive cash equal to the appreciation in share price over the market value on January 1, 2019. So, needless to say, guys, that this share appreciation right is with vesting period because the cash will only be given to the general manager after rendering a 4-year service to the entity. All right? Thus, the market value on January 1, 2019 is predetermined price for purposes of determining the compensation. So, take note that the predetermined price here will be equivalent to the market value on January 1, 2019, which will be our basis in determining later on for the fair value of our liability. Okay, the share appreciation right had the following terms. So again, we have a service period from January 1, 2019 to December 31, 2022 because that's a 4-year period. And then the number of shares is equivalent to 20,000 shares and it is exercisable on January 1, 2023 or after the 4-year vesting period. All right. Now here are the following fair market value of the shares. No, the market value of the shares. So we have our predetermined price on January 1, 2019, so 200 for 2019 up to 2022 na fair market value of 20, 210, 220, 240, and 250. So these fair market values, guys, will be very important because this will determine the amount of compensation expense that will be recognized throughout the vesting period. Okay? So according to the standard, no? According to the standard, the compensation expense that will be recorded will be equal to the fair value of the liability. And to compute for the fair value of the liability, you need to compare the predetermined price of the shares over the market value of the shares after a specific period. Okay? So in this case, since we have here for 2019, so we will be comparing the predetermined price of 200 pesos, which is the market value on January 1, 2019, and the market value on December 31, 2019. So it means that we have an excess of 10 pesos. So that 10 pesos, guys, will be our basis to compute for our liability. Okay, so 10 pesos times total number of shares na 20,000. So the total compensation will be 200,000. All right? Now, if you could remember in the problem is actually requiring the general manager to work for 4 years. So that means the share appreciation rights is with vesting period. And as we all know, as the standard has suggested, these total 200,000 will be divided throughout the vesting period. So that is why we need to divide it by 4 years to compute for the salaries expense to be recognized on 2019. So in this case, we will be recognizing 50,000. Okay? So debit to salaries for 50,000. All right? Now, instead of um, recording an equity account here, we will be debiting accrued salaries payable. Okay, instead of crediting an equity account, we will be crediting an accrued salaries payable. Why accrued salaries payable? Because this 50,000 will be a liability of the corporation to its employee, no, payable at the end of the vesting period. All right? Pero we will be recognizing 50,000 of it this 2019. All right? Okay, so this time let's proceed for 2020. Now, if you have noticed from 210 na market value of your shares from December 31, 2019, it has actually jumped into 2,220 pesos. So that means there is an increase in market value of our shares, no? Market value on December 31, 2020. So just the same step that we have done in the 2019, we will be comparing it with our predetermined price of 200. Yes, our comparison will be that of 220 and 200, not on 220 and 210. Okay? Because the standard clearly stipulates that to compute for the fair value, the comparison will be the fair market value on a specific year end versus the predetermined price. Okay? Our predetermined price there, guys, is 200 versus the market value of 220. So that means we have excess of 20 or fair market value of 20. So 20 times total number of shares, 20,000. So your total compensation will be 400,000. All right. So again, 400,000, this is for the entire 4 years vesting period. So to compute, no, the amount of salaries expense that will be recorded in 2020, so we'll have 400,000 divided by 4 years, okay, times 2 years to compute for the accumulated salaries expense for December 31, 2020. So this is 200,000, okay? 200,000. Pero naka-recognize na ta og 50,000 last year, right? If you could still remember this, 50,000 recorded in December 31, 2019. So that will also be deducted para ma-compute na to ang ato ang compensation expense for 2020. Okay? We'll have 150 pesos, 150,000 pesos here. So we have salaries and credit to accrued salaries payable of 150,000 also. This process will continue up to 2022. Okay? So we have here on the third year for 2021, same step. We will compare the market value on December 31, 2021, which is 240, and your predetermined price of 200 pesos. So there is an excess again of 40, multiply it by your number of shares na 20,000. So from 400,000 na total compensation expense, it has jumped to 800,000. And again, that 800,000 is good for the entire vesting period. So, kailangan na po nato i-compute kung pila lang ang kailangan i-recognize for 2021. So, in this case, since there are already 3 years that has lapsed, so we need to compute for the um, cumulative compensation expense for 3 years. Alright? So, we have 800, this one, divided by 4 years na vesting period times 3 years that has lapsed. So that means, as of to date sana, dapat mag-recognize na ta og 600,000. Okay? And then, deduct all the accrued compensation na recognized already in December 31, 2020 na 200,000. So that 200,000, guys, is from the 50,000 in 2019 and the 150,000 in 2020. So that makes it 200,000. So 600 minus 200,000. So it only means that on 2021, we will be recognizing a compensation expense for 400,000 pesos. Okay? 400,000. So debit to salaries for 400,000 and then credit to accrued salaries for 400,000. Now, if the problem in your quiz or in your exam would ask you how much is your accrued salaries payable on December 31, 2021. Okay? Your answer would be the entire accrued salaries payable from 2019 plus 2020 plus 2021. Okay? So your answer should be 600,000. Okay? How much is the total accrued salaries payable on December 31, 2021? So of course, you should answer 600,000, not 400,000. All right? But if the problem would ask you how much is the salaries expense to be recognized on December 31, 2021, so therefore you will be answering salaries only for 400,000. Okay? The salaries that is only recognized on 2021. Okay. So let's continue for the last year. In the last year, wherein it is also the exercise date, your journal entry would be debit to salaries expense for 400,000, credit to accrued salaries payable of 400,000. So where did we get that 400,000? So from the same process, guys, market value on December 31, 2022 of 250,000 versus your predetermined price na 200. So that means the excess is 50 pesos. So 50 pesos times total number of shares na 20,000. So the accrued compensation expense on December 31, 2022 should be 1 million. Okay? For the entire 4 years, your total accrued compensation expense should be 1 million. Pero nakarecognize na ta ng 600,000. 50, okay? 50 for 2019, 150 for 2020, and 400 from 2021. So that makes a total of 600,000. So 1 million minus 600,000. So your compensation expense for 2022 will be 400,000. Okay? So debit to salaries 400 and then credit to salaries payable for 400,000 also. Okay? Also guys, on January 1, 2023, the general manager is now allowed, no, is now entitled to exercise the share options. So to settle the share options, right, guys, we will now be paying, okay, we will now be paying our general manager by debiting to, it should not be guys, it should not be salaries, but debit to accrued salaries payable, sorry, dapat ito ay accrued salaries payable. Okay, debit to accrued salaries payable and then credit to cash. Okay, to close out kasi nga na-exercise na ang share appreciation right. It is the date where the corporation will now pay, no, the general manager or the employee. Right? So debit to accrued salaries payable to close out all your accrued salaries payable and the amount of 1 million, and then credit to cash. Okay? Credit to cash for 1 million. Again guys, this is debit to accrued salaries payable and then credit to cash for 1 million. Okay? Now, suppose that in the preceding illustration, the market value of the share unfortunately drops on December 31, 2022. Okay? Since the predetermined price is also 200, then the entity has no obligation because there is no appreciation or an increase in market value on exercise date. Okay? So for example, instead of having fair market value of your shares on December 31, 2022 of 250, let us say it has dropped to, let's say, ano, 200 also. Okay? It has dropped to 200 also, no? Instead of 250, ang iyang market value on December 31, 2022 is also 200. So that means the entity will no longer have an obligation because there is no appreciation or increase in the market value on the exercise date. Okay? So, since from 2019 up to 2022, there is no increase, no? There is no increase. January 1, 2019, fair market value is 200, which is also your predetermined price. And then at the end of the vesting period or on exercise date, the market value is also 200. So that means, guys, 200 minus 200, that would be 0. 0 times 20,000. So your total compensation will also be 0. Okay? So there will be no compensation expense that should be recorded and no amount will be paid to the employee. But, sir, what will happen to the salaries that you have already recognized from 2019, 2020, and 2021? What will happen to those? So that has a total of 600,000. So that's 50,000 for 2019, 150,000 for 2020, and 400,000 for 2021. That gives us a total of 600,000. So what we will do, guys, we will be reversing it. Okay? We will be reversing it. That means we will be closing our accrued salaries payable because wala man talaga tayong salaries payable kasi nga walang appreciation sa value ng rights. So debit to accrued salaries payable to close out that 600,000 na recorded in 19, 20, and 2021, and then we will be crediting gain on reversal on share appreciation right for 600,000. Okay? So debit to accrued salaries payable for 600,000 and gain on reversal on share appreciation right for 600,000. Okay? So those are the steps that we need to consider and observe when accounting for share appreciation rights. So from the term itself, gani guys na share appreciation, so that means there is only a liability to be recognized and to be paid on the exercise date when there is an appreciation in the value of the shares. If there's none, if there's no appreciation at all, then therefore no more payment will be made to the employees and you need to reverse no whatever accrued salaries payable that you have recognized in the past. Okay? So I hope that such concern is clear. Okay. This time, guys, let's proceed with another illustration. All right. Now, this another illustration, as mentioned earlier, it does not give you any predetermined price. Okay. It does not give you any predetermined price. So, if there is no predetermined price, what we will be using is the intrinsic value. Okay. So, example, on January 1, 2019, Module Company granted 100 share appreciation rights to each of the 500 employees on condition that the employees remain on the employ of the entity during the 3-year vesting period. All right. So there is a share appreciation rights, and that share appreciation rights are with vesting period. Okay, good for 3 years. And the employees exercise their share appreciation rights as follows. So, 100 employees exercised on December 31, 2021, 250 employees exercised on 2022, and 150 employees exercised on 2023. All right? And the fair value and intrinsic value of the share appreciation right are as follows. So, you have there the values. Now, intrinsic value of the share appreciation right on the date of exercise will be the amount paid to the employees. Okay? So if we don't have predetermined price, so therefore it is impossible for us to compute for the excess, no? To compute for the fair value of our liability. So in this case, guys, if that is the case, then we will be using the intrinsic value. Okay? It will be the intrinsic value of the shares or the share appreciation right that will be the amount to be considered, no, to be paid sa ato ang mga empleyado. Okay? So let's account. For example, um, we have here on 2019, January or December 31, 2019, the first year of the 3-year vesting period. So we have how many employees again? We have 500 employees, no? 500, 500 employees, and then no assumption of employees leaving in the corporation. So that means these 500 employees will be receiving 100 share appreciation rights each. So 500 times 100, so we have total of share appreciation rights to be distributed of 50,000, no? 50,000. So multiply it by your intrinsic value, guys, of 15. Okay? Multiply by multiply by fair value. Sorry, multiply it by our fair value na 15,000 to compute for the total accrued liability. So we have 50,000 times 15. So your total fair value will be 750. Okay? 750. And again, since it is a vesting period, you divide it by 3 years. Okay? Divide it by 3 years para makompute na to ang atong accrued liability on December 31, 2019. So that will be 750 divided by 3. So we'll have 250. So that is why we debit here salaries for 250, credit to accrued salaries payable for 250. So again, guys, dito we don't have we don't have the predetermined price, but what we have is the fair value of the share appreciation. Okay? Okay. Not the fair value of the shares, but fair value of the share appreciation. Let me stand corrected. What we will be used in computing for the accrued liability computation is the fair value of the share appreciation right. So that will be 15. So that is why we have computed 750. So 750 divide 3, so that gives us 250,000 na salaries and accrued salaries payable for 250,000 as well. Okay? For 2020, let's proceed. For 2020, what happened? Okay? Still no changes in our employees and total number of share appreciation rights eventually will have 50,000. But this time, there is a change in our fair value from 15 pesos to 18. So that is why we have 50 times 18. So your total fair value will be 900,000. And again, you divide it by 3 years, multiply it by 2 para makompute na to ang ato ang total accrued liability for the 2-year period and deduct the accrued liability or the compensation expense that you have already recognized in 2020 na 250,000 last year, no, 2019. So that gives us a compensation expense for 2022 na 350,000. Okay? So that is why we debit their salaries for 350,000 and then credit to salaries payable for 350. And obviously guys, pagka 2019 and 2020, wala pa allowed na mag-exercise because wala pa man nahuman ang ilang vesting period. Okay? Now, in 2021, okay, in 2021, which is the last year of vesting period and the first year, no, on December 31, 2021 also, the first year where the employees are allowed to exercise their share options. So, in this case, we will account first, no, our salaries and accrued salaries payable first before nato i-account kadtong mga employees nga nag-exercise na sa ilang share appreciation rights. Okay. So, in December 31 of 2021, your fair value from 18 pesos, it becomes 20. So that is why we need to compute um the new value of our compensation. Pero take note guys, 100 employees in 2021 was able to exercise their rights already. So that means from 500 minus 100 employees na nag-exercise sa ilahang rights. So ang ato ang share options na share appreciation rights that is still outstanding is 40,000. Okay? 40,000. So 40,000 times the fair value on that date, December 31, 2021 na 20 pesos. So that is 800. Okay? 800,000 minus the total amount that we have recorded already as of December 31, 2020 na 600,000. So that means that the compensation expense for 2021 initially will be 200,000. Okay? Initial compensation expense for 2021 will be 200,000. Pero magdugang pataana guys kay naapamay para sa 100 ka employees nga nag-exercise. Okay? So let us now account para sa mga employees that exercise their share options on the same date. So they are 100 employees multiplied by the total number of share options entitled to them. So they will be having a total of 10,000 na share appreciation rights. Okay? And then according to the standard, let me remind you that it is the intrinsic value, no? It is the intrinsic value of the share appreciation right on the date of exercise ang ibayad sa ato ang mga employees. So therefore, how many share appreciation rights ang present for that 100 employees? 10,000. Okay? So pila ang intrinsic value on December 31, 2021? 15. So 10,000 times 15 pesos. So your total accrued liability will be 150,000. Okay? You will have 150,000 para sa katong nag-exercise nga 100. Pero guys, since gi-exercise naman ni siya, okay? Since gi-exercise naman na siya, that will now be paid in cash. Okay? That will now be paid in cash para sa mga nag-exercise nga 100 ka employees. So, our journal entry here will be debit to still salaries for 150,000 and then credit to cash for 150. Okay? There is a different accounting para sa mga nag-exercise and there is a separate accounting also for those employees na hindi pa nag-exercise sa ilahang share options or share appreciation rights. Alright? But this time, if the problem would ask you, compute for the total compensation expense for 2021, then obviously guys, you will combine these two salaries expense or compensation expense, no? The salaries expense for those employee who did not exercise yet their share appreciation rights and those salaries that is already exercised by those 100 employees. So that means for that question alone, compute the compensation expense for 2021, you should answer 350 pesos. Okay, 350 pesos. All right. Now let's proceed for 2022. Okay? In 2022, guys, there are how many employees? There are 250 employees who exercise their share appreciation rights. Okay. So this time, how much is the intrinsic value? Okay, before we account for the intrinsic value, let us account first. Let us account for the fair value of share options on December 31, 2022. So, last 2021, there were 100 who left. So, therefore, the remaining employees, not left, but for 100 na nag-exercise sa ilahang share options or share appreciation rights. So, this time, 400 na lang. So 400 minus 250 employees na nag-exercise also sa 2022. So that means 150 na lang ang wala nag-exercise. So 150 times 100. So there are still 15,000 na ano guys, na 15,000 na share appreciation rights outstanding. Okay, multiply it by the fair value na 21, multiply it by fair value na 21. So therefore, the accrued liability on December 31, 2022 should be 315,000 na lang. Okay? 315,000 minus the accrued liability on December 31, 2021. So how much was our accrued liability as of December 31, 2021? Okay? We have a total of 800,000. So where did we get that 800,000? Where did we get that 800,000? So that's actually from 250 in 2014, 350 in 20 no no 250 for 2019, 350 for 2020, and 200,000 for 2021. Okay? 200,000 for 2021. So there is an there is a decrease in accrued liability because ang atong accrued liability na lang dapat pagka December 31, 2022 should be 315. Okay? Pero naka-recognize tag accrued liability na for 800,000. So that means we will be adjusting our accrued liability no for 485,000. From 800 it becomes 350 na lang. So atong i-adjust ang atong accrued liability by debiting to accrued salaries payable for 485,000 and then credit to salaries for 485. Okay? So why debit accrued salaries payable? Because your accrued liability has decreased from 800 to 315. So we need to adjust it. Alright? Sige. Also, we need to account para sa katong 250 ka-employees na nag-exercise. Okay? So 250 employees times 100 na share appreciation rights entitled to them. So we have a total of 25,000. Multiply by your intrinsic value on 2022 December 31, 20 pesos. So you'll have a total payment na 500,000. Okay? 500,000. So, para sa 250 ka mga employees, they will be receiving on December 31, 2022, a total cash of 500,000. So, to record that settlement, debit to salaries for 500,000 and then credit to 500,000 pesos. Okay? For 2022 also, if the problem would be asking for you for the total compensation expense for 2022, your answer should be net, no? Net of net na 15,000. Where did we get that 15,000? So that is from the 500,000 na salaries debit and then adjustment na credit to salaries for 485,000, no? From the adjustment of your accrued liability. Okay? So that means you will be answering 15,000 as your total compensation expense for 2022. Okay? But how about if the problem would ask you, how much is your total accrued liability on December 31, 2022? Okay, on December 31, 2022, your accrued liability will be this amount, 315,000. Okay? Sige. Let's proceed to the last year, 2023. Okay, on 2023, this is the last year where the remaining 150 employees will be exercising their share appreciation rights. So we have their share appreciation rights exercise na 150 employees times 100 na ano na share appreciation rights per employees. We have 15,000 in total times intrinsic value na 25. So we have a total payment na 375,000. Okay? Pero, we have an accrued liability recorded as of December 31, 22 man lang na 315,000. So therefore, we will still recognize a compensation expense for 2023. Okay? So total payment for 2023 will be 375. Pero naka-recognize na tag liability na 315. So that means kulang pa ang atong salaries expense for 60,000. So that is why debit salaries expense for 360,000. Okay, debit salary 60,000 and then i-close na nato ang remaining accrued salaries payable. Okay? I-close na nato siya by debiting it. Okay? And then credit to cash for 375,000. Since lahat naman na share appreciation rights have been exercised already. So therefore, on 2023, December 31, you will now have zero balance sa imuhang accrued salaries payable. Okay? So, I think that's the end of our first part ng video lecture natin sa share-based share-based compensation, cash settled, or share options. Okay? So, if you have time to read these resources, it could also be beneficial for you. Okay? So, that's it for our first part and see you in our next video lecture. Alright? Thank you very much for watching and God bless.